What's up, everybody? It is Friday, TGIF, July 10th. Big rally today, reversed yesterday's decline, new high in the NASDAQ, Tesla going crazy, over $1,500 a share. So here's what we got. All right, now I'm going to break it down for you because we got a lot of data that came in, and it's kind of sloppy. Before I get into this, I want to talk about something which is very important. If you are going to be successful as a trader, what is important is not focusing on the money, it's focusing on the process. In other words, the way you go about it, you have to be very disciplined about sticking to the process. And if it is a time-tested, successful process, as my approach is, then that's the way you gauge whether you are doing this successfully or not. The money will accrue. You'll make the profits. Over time, you will be a winner, but you have to focus on the process. If you don't focus on the process, and if you focus on the money, that's not going to work out. All right, let's talk about the data. So we had, ongoing new record high in the NASDAQ. Yesterday, by the way, it was interesting because the put-call ratio yesterday on a down day in the market, S&P and Dow, we actually had a pretty low put-call ratio. So they were, you could say they were buying that dip. Low put-call ratio means high volume of calls relative to puts. So we could infer from that they were buying the dip. Now usually, and we've had it 2 days at 0.7 handle. That's pretty low. Okay, so I'm surprised to see this big move today, but that's what happened. It was a headline move. We had some positive vaccine news or whatever. The bank data. First, let me talk about the fiscal flows. Fiscal flows, of course, the spending remains, unprecedented, strong, amazing. Still seeing very weak in the unemployment and withholding tax flow data. And kind of see a correlation there in weekly unemployment claims. They're not coming down that much. Although in the recent week, down 99,000, that was a bigger reduction than the previous week. But still, if you take the average of the last 4 weeks or the last 3 weeks, nothing compared to what we saw prior to that when it was dropping at like 322,000 a week. Now it's dropping at, about 70,000 a week. So not as rapid a drop. So my employment and withholding tax data flows kind of speaks to that, all right? Banking data, which just came out. I mean, it was all over the map, kind of sloppy. So here we go. First of all, another decline in bank assets, big decline in bank assets. We had the biggest drop in bank deposits since December 2015. So it looks like what the Fed is doing, what the Treasury is doing in terms of debt sales and taxation is overwhelming, or I guess draining deposits. It's offsetting and then some the spending. So the spending flows are putting deposits into the economy. What the Fed is doing, what the Treasury debt sales are doing, and what the taxes are doing is draining out a net amount of deposits. Now, what's interesting about this is that the last time we saw a decline of this magnitude, and by the way, it was down 69 billion, deposits were down 69 billion. The last time we saw that was December 2015. That preceded a 10% decline in the S&P. Pretty significant, all right? On the other hand, we saw, and by the way, let me just add to that, credit card and revolving credit loans, you know, I talk about that a lot because that's like a barometer of spending. A lot of people spend using their credit cards and revolving credit. That declined again. So we had a 1 week increase the previous week, and last week it was down again. So there's no sign in that data of any big spending pickup. Now, we saw a big increase in bank residual. What is bank residual? That's assets minus liabilities, literally bank wealth. I've been talking about that. I've been negative on the banks, but that jump, which was the biggest 1 week increase ever, gotta get bullish on the banks again. It doesn't mean immediately they're going to turn around, but their capital situation, their financial situation looks a lot better now. By the way, that came about as a result of that big decline in deposits. Deposits are bank liabilities, obviously. So we had loans down, credit card and revolving loans down, commercial and industrial loans down again. So ongoing consolidation in business balance sheets. An improvement, a big improvement in bank residual, all right? Big drop in deposits. Like I said, I mean, the data is all over the map. Market obviously has a lot of momentum here, but I continue to believe it is very, very overbought at this point, but there's some positives and there's some negatives. You know, we got to see what happens next week. And next week, on Wednesday, July 15th, that's tax day. Ooh, tax day. So actually I went back and I listened to a video I made like way back in late March where I said all this stimulus stuff, I mean, it all kind of comes due in mid-July. So let's see what happens. But right now, I mean, if I was going to do anything, well, it's all in the report. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. And remember to listen to my podcasts. It's all here in the link below in the description. See everybody on Monday. Have a great weekend. Bye-bye.